site of the orbital discovery, and the shuttle has cleared the tower. Every core computers now have primary control of critical vehicle functions.
All right, guys, what is going on? Welcome to my YouTube channel. My name is John Fibonacci. Most of y'all know me from Instagram. That's my only one, at John Fibonacci. No underscores, there's letters, but no numbers or anything like that. So don't get got. I have a special guest with me today. We were supposed to be on here last Friday. We were having some sound troubles, but I think we got everything fixed. I think we're good to go. And today is the 10th, right? So we had rescheduled for today, and here we are. So it is Friday, which means it's pretty late into the week. So I hope it was a good week for you guys. There was a ton of setups yesterday, or this week, especially yesterday, even though I was at the dentist on the operating table getting my, they fucked me up pretty bad, but we're here and all is well. So anyways, I got Iffy Marshall here with me. Iffy, are you with us?
Yo.
What's good, man?
What's good? Good to see you, my guy.
Yeah, it's good to see you too, man. Chat, let's get a sound check real quick. Let me in the chat, let me know if you guys can hear Iffy, and I'll bring him up onto the screen.
Cool.
All right, they said that they can hear you. You ready? I'm gonna put you on the screen now.
Yes, sir.
All right, cool. All right, so you are up and we are good to go, man. How you doing today?
Doing phenomenal, man. I'm doing real good. We had some nice movements this week in the markets. Gold did his thing, Chef did his thing. I can't complain. It's been a great week.
Awesome. So I want to give the floor over to you. Give you an opportunity to discuss anything that you want to. You're pretty much free to do whatever it is that you want. I got some questions for you here in a little bit, and I know that the chat is open to anyone. So real quick, guys, share the link. If you're on Telegram, we can get some more people on here. We're gonna drop some value for you guys today, and it's totally free, so why not? And if you guys have questions for Iffy or myself, you can feel free to ask them into the chat. The only thing I have for you guys is 4100 or 4105, I think, for the S&P. I'm just kind of gonna be watching that in the background here. I'll leave the S&P up just to see if we get that for this afternoon while we're doing our thing. So Iffy, the floor is yours.
Okay, cool. So you're looking at S&P?
Yeah, I think the indices are a little sloppy today, but I'm done for the day. I scalped it a little bit earlier. I'll go over that later, but I think 4105 could be a possibility for today. But I'm done trading for this week. I'm done with what we did this morning. So
Mm-hmm.
yeah,
Yeah. I can share up a screen.
yeah. Go ahead.
Cool. I'll go share button here. Cool. So, yeah, I mean, this week, it was pretty cool. I started off the week pretty much just wanting to see like dollar shorts. Started off the week with gold longs. I really been reducing just the amount of pairs that I've been trading, just because. Yeah, I mean, you only need a couple to get some solid moves out of these markets. And yeah, I started off my week with Chef up in here from that trade. Once we were able to swipe out these highs here, Chef gave a nice sell to buy. I really thought Chef was gonna like come below this low here, and we were gonna get like an internal liquidity sweep there, but it didn't do that. But we did definitely take this thing all the way down to this little area here. We got a couple good entries on that, right? This was that first. I'm actually gonna pull up my other Chef chart. But yeah, this was that first area, right? We're in this range here of 9150 to 94. It's the current range that we're actually dealing with. And then the fair value of that range for myself was this daily level here. All right, so price came above fair value, excuse me, while also taking out this high, right? So once I saw that, and we actually were able to get a breakdown in price, I'm just like, yeah, GG, shit needs to come down. All right, so that was my area there for Chef. I mean, it was playing around because I first took it like here, and I got this nice little run. And I usually go break even overnight, and honestly, this was hella sketchy.
Yeah.
It was hella sketchy. But I didn't go, like, my gut was just like, yo, don't go break even. I feel like, when people are too pressed to go break even, it's like they haven't really truly accepted the risk on the trade.
Mm-hmm.
And so, like, I always accept the risk on the trade, and so, yeah, I was fine not going break even. I was like, nah, this shit's not going to hit me break even, then do what I wanted to do. So I actually didn't break even on that, punch back up in here towards my entry. And we saw price come down lower. And so by New York, we were right in here, and I was pretty adamant and firm on the shorts, dollar shorts to start the week. And so, I kept shorting it. I actually kept shorting this. And it's funny because dollar was, if you're looking at dollars, someone probably would have thought to themselves like, yo, why are you trying to short Chef? Because, it definitely started off the week where, it just didn't want to break at all. It kept making and maintaining these higher high and higher low points. But that honestly doesn't mean much to me when it comes to dollar. Like a lot of times with correlation, I feel like people can get too, what's the word I'm looking for? They can get too, there's a certain word that I'm looking for, but pretty much, they get too strong on a bias when it comes to correlation.
Like conviction?
Yeah, exact. That's the exact word that I was looking for. Like they have strong conviction when it comes to like correlation with the dollar. And I just look at correlation completely differently. I'm understanding correlation to be pretty much the move in itself. Like, what time is this happening, and are we going up or down? So, like, if dollar is going up, of course, Chef should be going up, but it doesn't mean that they have to be necessarily the same trend on that time frame. Is how I really understand correlation. And so, dollar, even though it was going up, I was still able to use it with Chef because, as dollar was coming up to make a higher high, Chef was coming up but into the range to make a lower high. So whenever we have like two pairs that are, let's say they're supposed to do the same thing, right? One could completely be in an uptrend and the other in a downtrend, like 100%, right? And it's just, okay, when this one pushes up, it's expanding, but this one's retracing, right? This one pushes down, but it's retracing, and it gives the catalyst for that one to push down and continue to expand. And so they're still essentially doing the same thing, right, at the same time, but on one, it's an expansion, and on the other, it's a retracement. So, like, that's why a lot of the times we can see, like, even though dollar will be doing one thing, and it's like, yo, why is this other pair? It just seems like it's doing its own thing, or whatever the case may be. That's just how I play correlation. So dollar making a high as Chef was coming into this, gave me confidence on us continuing short. So that was definitely some great moves to start the week. And I think this was like Wednesday here. So like really all week I just kind of been walking Chef down, shorted here, wanted this to come back up in there, but it didn't get close enough. And then shorted here. And then ultimately this was like my first target, and was just wanting to see if we were going to break through this or not. But I mean, now that we have this shift here on Chef, back to the upside, overall being in this bullish range here, I'm thinking Chef, can continue higher. I've been watching 30 lately, man. Yeah, I've been just watching 30 lately because I'm like, yo, I want to figure this thing out and start trading 30 more. Typically, like if I'm messing with the indice, I really only touch NAS, but I've just been slowly forward testing US 30. I don't know if I know you deal with indices for the most part, John, but wait, do you really trade 30 like that, or is it just S&P and NAS?
I prefer the S&P the most. It's what I'm most comfortable with. The math to me is a lot easier as well, and it seems like a lot of the times in bullish markets, the Dow usually isn't the leader in the case, and so it's like if it's not the strongest index, it's not the one that I want to be trading. And then sometimes I don't really care for the math either. And I don't know, it's just for those reasons, I just would rather trade the S&P or the NASDAQ. So the NASDAQ is a little bit more volatile in terms of like points, like the math system. Like if we had a setup on both the S&P and the NASDAQ, I feel like the NASDAQ, you would likely make more money or lose more money versus trading the S&P. So the NASDAQ can kind of be like that double-edged sword. It could really do you well, or it could rip your fucking face off, And so the S&P is kind of like the one that's generally in the middle. So it's not usually the leader. It's not usually the laggard. It's kind of like the more, I guess, calm one in my opinion. So just because the math is easier, and I feel like it's not the one that's gonna, rip your face off. That's just what I typically go with. And
no, definitely. Yeah, I think that's also why I liked NAS. I actually liked the volatility with NAS, but for me, it's just like I'm big on market structure. Like that's what my style is like the foundation of my trading style is really based around market structure. So
Hmm.
I'm always considering like, okay, what has the cleanest structure? And you know, Nas tends to give some decent moves, but the structure is really what I like about Nas. It's super clean and respectful when it comes to market structure. 30 seems to be a little more all over the place for myself.
Yeah, that
Um,
chart right here, like what you just pulled up, this to me looks like shit. It's like, look at the last what few days. I mean, it's been generally sideways. I mean, you see a ton of manipulation. You know, it's like highs swept back in the range, lows swept back in the range, and a lot of people don't like that type of environment. I mean, I do, but it's just overall, you know, if your entries and exits aren't precise, then it's a very boring market to be in.
no, that's a fact. This shit looks like trash to me. Over here was actually pretty clean. I'm not gonna lie, based on what I look for. Like here was clean, here was clean. Here's when it started to get a little sketchy, man. A little sketchy. Cause I honestly didn't think that those were gonna hold. You know, so like I was a buyer in here and here, and I just thought these were gonna get taken out, and it's, you know, 30's just like, forget that. We're just gonna leave those for right now. So I'm not sure what 30 is intending to do with those highs, if it's gonna come and eventually clean those or not. But all this over here was actually really gas, and this is what made me started to look at 30 again. Cause
I
like,
just got
yo,
not to cut you off, but I just got an alert on S&P. I think we took those highs. Could you pull up the S&P for a second?
indeed.
I think we hit well, SPX is going to be a little bit different, but it's fine. Either one, it doesn't matter.
Yeah, I'm just used to using that feed. Wait, what feed you use? You're looking at futures, right?
Yeah.
Okay,
Oof.
I can pull up. I'm pretty sure I have it on one of these.
Chat, did you guys hear that alert? That da-na-na, that trading view default alert. I think you guys heard it if I'm sharing computer sound.
No, I don't think I have it on there. I think I might have took it off.
It's fine.
Well,
Go down to the 5 minute. Yeah. So like that high right at, I guess, 40.92. Yeah, like right there. That's what we were looking for this afternoon.
Mm-hmm. Well, you took it in here.
No, I didn't take anything for longs. I was done. I mean, I was just wanting to watch it today, because usually for the live sessions I try to give people you know, a sense of what I think the market's gonna do. So pretty much every live stream I'm like, oh, this is what I'm watching, or this is what I'm looking for. And that's just, I'd like to do those things, you know, that way it's not like, oh, we're just talking about hindsight or whatever. It's like, no, we have, you know, a directional bias on something, and it's either going to hit or miss. And so I think this is like the 5th or 6th stream that we've done, and we pretty much haven't missed yet. So it's been pretty fun. But yeah, we were just watching it, that's all.
Okay, cool. Yeah, no, this looks pretty sturdy. Let me just check out a 4 hour. Yeah, those are all bullish in there. Yeah, that's 30. That, it would be my range here based on a 1 hour. But then this would be my range there based on a 4 hour. So looks like it is playing that 1 hour range for now. As far as if it's gonna come back down to play the overall 4 hour range, not sure, but that was clean right in there. Just want to see what this 5 minute looks like. Oh no, that's trash. That would have hit me out personally. I would have attempted that, and then when it broke again, it never came back. So I would have been salty on that one. I'm gonna see what Nas looks like.
I think Nasdaq is our weakest one today. I wouldn't be surprised if it hasn't made a new high, just like the other indices. Naruto said he opened up his trading view because he thought that alert was one of his. LOL. See, look at that weakness.
Didn't really trade into anything over there that I would have been interested in. Yeah, yeah. I mean, I didn't touch indices this week. I really only touched gold. And Chef Gold gave some nice buys up in here, and yeah, we rejected from that little imbalance that I had marked here. I had an imbalance refined based off of I don't know if you ever still pull out this tool here, but if you
Which one?
remember this fixed range here.
Um, I've shown it before. When I made the true imbalance, because when you really understand what an imbalance is, I just pulled up the volume tool, and one day I saw that those zeros that you have up there, like 0 by 279, and it's like oh, that's a true lack of volume, and so that's when I dubbed it the true imbalance, and I had just never seen anyone do that before. So I mean, I don't know if I was the first. I don't want to say that I created that or no shit like that, but I had just never seen that, and so I've showed it, but I don't usually pull that up anymore.
Right, right. So I've been using it in the sense of like what I'll look for, because you do have the zeros, and sometimes they'll get there and it'll react really strongly. But how I've been using it is whenever we have a huge jump in volume. So like if you're noticing that, because we're understanding imbalances, like an imbalance like this, there would be buy side liquidity left inside of this here,
Mm-hmm.
where buyers never really got a chance to be buyers. And so what I look for is that huge drastic change in uh the volumes here. So, here, if we start from the bottom and kind of start to work our way up, like this is where I would say the most drastic change occurred from this 2.5K here to 400 here was the most drastic change in volume. So like the way that I had been using it was I would mark that lower number. So I'd find that gap of where we had that huge change in volume.
Mm-hmm.
And from there, on the way up, any number that was like the smallest number that I saw would create my zone. So like not the zeros, because of course zero is zero, but the smallest numbers in between here. And then if I had any zeros in there, I kind of would just draw a separate thing for that. But like that's how I had been doing it, and I had wanted it to come right in there, and it like just fell short of that. I was like, oh, okay. But yeah, gold was pretty clean. But yeah, that's how I've been using that. I still actually kind of pull that out every now and then, and it's been giving me like some super spot on imbalances whenever we have a super fat imbalance, and it's like, yo, how much of this does it plan on actually filling?
Mm-hmm.
But yeah, I mean, I started the week off bull for gold up in here, and we started walking up, and we created this little trend line liquidity here. And then when we created these equal highs here, there was the thought that we would punch above that and go into the imbalance and take some of this back. But then it was also wondering if we were going to play out of there. No accumulation in there, but it didn't give me anything to like play off of in here personally. like as far as like how I would play this and where I put my stop and everything like that. I saw something on the 1 minute, but I really don't. I don't be doing all that when it comes to Goldilocks. But yeah, it definitely gave a little breakdown on that 1 minute there. So salty I missed that one. But yeah, I was pretty clean on gold, all of the buying scenarios for the week. Bro, I don't know. I know that you've been trading for a minute, so you've been in the game a long time. Sure, you've been around seeing all the different like strategies and like different methods and stuff.
Mm-hmm.
You remember freaking Steve Morrow's whole like market maker thing?
So back in 2000, here I'll turn my camera on. I wanted to turn it off while you were doing your thing. I think it was like 2015 or 2016. It was pretty popular. I took one look at it and was like, nah, I'm not really fucking with that. Some people swore by it. They were like, oh, this is the greatest thing or whatever, and other people were kind of like me. I was just a little skeptical about it, so I never really dove into it. But yeah, I've basically heard mixed things about Steve Morrow and whatever he's got going on. But why do you ask?
For me, that whole thing was like, I was there around that era. The whole moving average, pin to the mayo, all that type of stuff.
Yeah.
All that was pretty trash. I'm not gonna lie. But the one thing that I did get from his whole thing was like this whole idea of like midweek reversal, right? How like typically midweek we can see a shift in the momentum, us going the opposite maybe of what we've been doing from the beginning of the week, or even just a deeper, higher time frame retracement, which on a lower time frame would look like a reversal, right? And so, like, of course, us having the understanding that we have on things now, like, just kind of developing a strategy over the years and stuff,
mm-hmm.
It's been making sense with smart money. And that's something that I've become, like, super big on. It was, like, this midweek reversal idea. And, it makes a lot of sense because, midweek is Wednesday, Thursday, right?
Mm-hmm.
And if we pay attention to the economic calendar, a lot of the times we get the major news events on Wednesday, Thursday. Of course, not all the time, not every single week, but if you were to just look back at the previous weeks, a lot of the big time red folders are on Wednesday, Thursday.
Right.
Like I've actually been using it for like profit taking and like hedging into things, pairing it with market structure and of course price action and everything, right? You don't want to just say, oh, it's Wednesday, I'm gonna just go the opposite. But like, actually pairing it with market structure and like these concepts and everything that goes on. And so like something that I've really noticed is, by Monday, Sunday to Monday, whatever we do from Sunday to Monday, that usually starts the week. Tuesday usually will continue what Monday did. Not all the time. I've forward tested this stuff a lot too. Forward testing is something else that's really big that I think people need to start doing more of. But Tuesday will usually pretty much just continue with what Monday did. And then Wednesday, depending on where we are, what the economic calendar is looking like, Wednesday we usually get that midweek pivot, right, to where we go the other way.
Mm-hmm.
And if we do not get it on Wednesday, it becomes even more probable on Thursday, right? Because we're just playing probabilities at the end of the day. And so, that's something that anyone on the call, you guys can feel free to back test or forward that test that, themselves. But like, for example, if we look at gold, that was pretty much what we got. We can look at some of the other majors as well, and it followed suit. But Sunday, let me actually pull up a calendar real quick. Sunday was what day? Sunday was the 5th. Am I looking at the right calendar? Yeah, Sunday was the 5th, right? Yeah. So
I'm
that's
not sure.
here. Yeah, no, I pulled up the calendar. Sunday is the 5th. So Sunday to Monday, New York. Monday, New York. It's like going into here. So what we did for New York Monday was, we had a buying opportunity out of here. Okay. And so then Tuesday, New York, which was the 7th, I would anticipate that it pretty much does the same thing for Monday, New York. So Tuesday, New York, right, would anticipate also continued buying scenarios. So we got that nice little run up there. And then when it took out this range here, right, external liquidity, it did come back and take, internal liquidity from the range of here to here, right? So I took that as well, being mindful of that, Tuesday, right? And so boom, that's Tuesday's movement, and then boom, we got Wednesday, New York. So Wednesday by New York, we didn't look like a sell just yet to me, just following the structure and everything like that, and also noting that we did have this imbalance up in here that is pretty much waiting for us to trade to, and that being a target. Okay, Wednesday anticipated continued buying, but Wednesday is the first day that I would anticipate, maybe some price action that'll have us go the other way. But since we didn't have that, I did continued buying. And then Thursday, now if we don't get midweek on Wednesday, it's like an 80% chance we're gonna get it on Thursday. Like it's very high probable chance that Thursday does the opposite of, whatever however we started off for the week. And I noticed that whatever day midweek falls on, and I'm actually going to go back at some past data here and also just further show that, confirm that. Whatever day midweek falls on, like I'll hold that trade all day. Because whenever we get that midweek pivot, that midweek reversal, it moves that direction almost all day. Not all the time, of course, but it's very probable that the entire day, the rest of the session, even through Asia, it'll continue through that direction. And so whenever I am able to snipe the high or the low on midweek, I typically like to hold it for the day. And then where we are by, let's say, Friday, New York, where we are structure-wise, if structure has been broken from midweek or if structure stayed intact for midweek, would pretty much determine like what I would anticipate the rest of the week. So like, let's say, for example, we got midweek on a Wednesday, and then by Thursday, New York, structure is still intact. Then that Wednesday, let's say, boom, Sunday, we started here, Monday, Tuesday, we got the run up. Wednesday, we took out a higher time frame high, and we get this deeper retracement that pulls us back into the range. That structure maintains by Thursday, New York. Thursday, I would just expect the continued move in what the overall structure and order flow is. But if say, for example, by Thursday we've shifted, then still Thursday I would just anticipate that we continue in what overall the market structure is. So like if we were to kind of pull back here on let's say Aussie from this other week here, because I was a buyer on Aussie dollar down in here and right in here as well. So the prior week, let me pull up this calendar.
Hey, real quick, while you're doing that, guys, if you haven't already liked the video, if you got some value today, go ahead and do that, and make sure you guys are subscribed so that way you don't miss future content and future videos. Continue.
Yes, I'll hit that fucking like button for my guy and that subscribe button for my guy. Yo, if you're not subscribed to Fibs,
Appreciate you.
I don't know what you're doing, man. I'm pretty sure your stop loss gets hit.
Jeez.
Yeah, so like I was a buyer here. This was like the 31st. The 31st was a Tuesday. Okay. So it really just depends on like by Wednesday, what have we been doing for majority of the week by like Wednesday, Thursday. So this was a Tuesday. So Tuesday, New York, we gave a buying opportunity. Okay. And then this was the first was a Wednesday. Okay. Wednesday, we didn't really have any scenarios for selling that I liked to hold because I did take a short here, but I also bought it here. Okay. But Wednesday, New York, and we know we had that heavy news Wednesday, we actually continued buying. And so that would say to me, Thursday is very probable that all this is going to get taken. That we should at least take back Wednesday's move. Okay. So this was Wednesday. The first, we got that nice little buying scenario. But here is the second, which was Thursday, right? By Thursday, we pretty much we would look for market structure in the opposite direction of whatever we've been doing for the week. And so once I saw this by Thursday, we had this high, higher low, we failed to make a new high there. Those are pretty relatively equal highs. But we broke down and we broke this little structure here. All right. By Thursday, New York, I would anticipate that we go the other way. I could pull up some more examples. I just don't want to keep having to pull up a calendar and stuff so I can find that day. But yeah, I mean that's something that I've noticed a lot, with the market, and I've been using this every single week, just using it with news, and it's been pretty accurate for majors and stuff and gold, since that's all I really trade and look at. But gold was pretty much the same thing as that, to where 31st, which was a Tuesday, we got buying. Wednesday we got continued buying, and then Thursday we started getting what looked like a distribution to me for a short. So I was seller there, and we got that nice massive move. So definitely something I was gonna say. So is that something that you would say you notice, as far as just by midweek we tend to just pivot overall momentum, just in your own trading,
Yeah. Well, so obviously the economic calendar, forexfactor.com is what I've been using for pretty much forever. And, if you look at, if you break down the trading week, right? Every 5 days, Monday through Friday, and you add things like contract expiry for futures, or NFP, CPI, stuff like that. And even on the weeks where you don't have stuff like that, you will notice a phenomenon, right? Hardly ever the market goes up 5 days in a row or down 5 days in a row. There have been weeks like that, of course, but for the most part, you're usually going to have turning points within the week, whether it be any day specifically. So what I do a lot more so now is that same approach, but for the session. So I'll look at indices in the morning, and I'll look at what London has done, and it's okay, so think of it like this, where you're looking at it as all right, Monday and Tuesday have been, let's say, bullish, so Wednesday we might get a reversal. It's kind of like that, but with the session. So okay, London traders are up right now, we've got some equal lows, so if they're going to be attacked during New York, then I may play that intraday reversal for their stops. So it's kind of similar to the day of the week phenomenon, but more so on an intraday session, because I like being able to frame a trade. If it's for Forex, I want to be able to take a 20 pip, 15 pip stop or less. and if it's for the S&P market, 10 points or less, typically about between 5 to 8. And I like low risk trades like that, like low point risk or percentage risk. And actually, I was going to ask you about that here in just a minute. So, we know that markets are fractal. So I understand what you're talking about, like midweek reversals. But I just take that fractal and apply it to intraday trading, if that makes sense.
No, that's funny that you mentioned that. You brought up the fractalness of the market, because that's actually what I was gonna touch on with the whole like midweek reversal. Like I've noticed that it's fractal. It's kind of like how we have seasonality, and
Right.
through the months we can see a shift depending on where we are in the overall like seasonality of things. And so like me really honing in on this whole like midweek reversal idea, I have noticed the fractalness when it comes to an intraday basis, and then when it also comes to like a quarterly basis.
Oh yeah.
It can be brought down to a smaller time frame, if you will, or it could be zoomed out on. But like, yeah, definitely what you mentioned with the sessions is something that I noticed as well. And so like, since I'm more like intraday swing, I've been big on, looking at it from like a day to day, week to week basis. And when also applying this idea with the overall higher time frame market structure, that's what's been able to get me some like understanding these like huge pivot areas. Because like when we get news, or like when we get like, for example, CPI, or funds rate, and it falls on this Thursday, but then at the same time it's also lining up with seasonality where we may be expecting a pivot. Like it gives that kind of extra confluence. But yeah, I've been noticing that fractalness. And I'm big on that, honestly, just the market being fractal, and how it's like, the same thing that can be applied on the lower time frames can be applied on the higher time frames.
Mm-hmm.
'Cause pretty big on just like spirituality, and just understanding how everything in the universe is actually fractal, which is why I'm big on Fibonacci and like using Fibs, because I look at the market as like, it's really a direct reflection of human interaction. The market is a direct reflection of human interaction, human emotion. And that's why I really love trading, besides just like the money that can be made. But I feel like understanding the markets gives you a better understanding of just like, not only of course the economy, but just like people, and where things are headed. Like, and that's why I've really kind of prided myself on being accurate, not just to be able to make money. Because like over the years, and I'm sure you've probably over the years, you've probably come across endless strategies where you learned how to catch a 50 pip move or a 25 pip move, or whatever the case may be, and that just maybe wasn't good enough for you. Not even pip wise, but just like having a better understanding. Because like I know myself, over the years, man, like I've come across strategies where I've been able to make money and be profitable, but it was just like being able to catch a quick move, or being able to capitalize on a move, but not really know and understand where the market is going and why.
Mm-hmm.
And I want to say like I developed this like almost obsession of just really understanding the market a lot more, not to make more money, of course, to make more money that'll just end up being a byproduct, but to just really understand things, because it's kind of like, even when we were, back in 2020, when we were calling like dollar to drop, we were calling everything to drop, you
Mm-hmm.
know, um, having that idea and understanding that the markets, when it comes to forex trading and when it comes to stocks, it all just ties to money. And we follow the money regardless. And so like that kind of showed us like, if we're anticipating dollar to drop, or stocks to drop, some serious shit's got to go down in the actual world. right? You know, to expect the crash that we was expecting back in 2020. But just like that overall fractalness of the market and understanding that it's a direct reflection of human interaction, human consciousness, human emotion. That's what really got me obsessed with it.
I think you were cutting in and out there for just a minute.
Okay, cool. My bad. Let me see. Let me actually check this real quick. Let me give me a quick second.
Okay. Real quick, I just want to catch up on the chat. I know I didn't come in here and say everyone that's here, but you know, I see Naruto, Ali, Eduardo, and I'm reading all the comments. It's just, you know, with the dual stream, it's hard to get. But I see Ricky, Jacob, you know, everyone in here. So I'm glad you guys are here. And we have about 50 something people on, but only 22 likes. So let's go ahead and get those likes up, guys. If you got some value, hit the like button. If you're not subscribed already, go ahead and do that, because this is not going to be our only stream together. I'm sure we'll have more streams in the future, so I would greatly appreciate that. It's for the algorithm as well, you know, not just the other social medias, but YouTube, right? They will see the algorithm, right, and help us get out there in front of other people so they can come in, they can get some value as well. So what's good, Siva? Well, we'll probably have to get him back on here soon too as well. But yeah, so I think you're good now, broski. I can hear you now.
Hear me? Cool, but good. The boy Siva. You know what I'm saying? Clapping easy as always. But yeah, man, like that's just really where my obsession kind of came from with like trading, because it's like, yo, you can understand this, then you can understand like the bullshit that's going on in the world.
Yeah.
You know, like even us being able to call, like, I don't want to fuck up the algorithm, so I'm not gonna say, but us being able
yeah.
Because with YouTube, you can't, if you name drop certain shit, it'll fuck up the algorithm.
Oh yeah. No, because they have automatic captions, right?
Yeah.
Now I have it on super low latency, so it's not on there. But if I did turn on captions, they would be able to tell certain words. So yeah, you know, who is it? Big Brother is watching. You know what I mean?
Yeah. Big Brother is watching. So I'm not gonna drop the word. I'm not gonna say the word. But when we had a certain, you know, thing happen in the economy, and you know, people were getting sick from bullshit. It's like we were able to call the bullshit. I know myself, seeing the chart to the you know, the what do I want to call it, the scamdemics, like seeing the chart to Pfizer and like shit like that. Like, man, it's like that in itself showed us like, yo, there's like manipulation. You know, I remember, I think it was Siva I was on the phone with. We were looking at a line chart for one of the companies that developed the whole like scam injection and shit. But it was like, it was a clear like breaking structure, liquidity sweep, breaking structure was coming into a mitigation. Like they were about to see a boom in their stocks, and just like shit like that for me is where like I really became obsessed over understanding the markets on a deeper level, because it's like it's all tied to the economy, right? It's all about money for them at the end of the day. You know, follow the money. You know, the stocks and the fact that we trade currencies. You know, that's we're working with money in itself. You know, or fiat itself. And so I really think just understanding the fractalness of the market and understanding the market, it gives you better insight on just like the manipulation and the shit that's going on in the world. It's like if the markets are manipulated, then yeah, it would make sense for a lot of other things to also be manipulated. But just like that fractalness was a big breakthrough for myself. It's like when we look at a monthly chart, like right now I'm on a monthly, and I look at this candle here, you know, this is showing me, it's just one candle, right? But it's showing me the overall movement from the month, right? And we're also understanding that in this one candle, there's an entire trend in there somewhere. Several trends that have switched maybe back and forth, right? And so just that understanding that fractalness was probably one of my biggest breakthroughs recently, because I use market structure and everything like that, and I've always have over the years. But I want to say just within the last maybe 3 months or so, I just had a really huge breakthrough on just the fractalness of the market, and just how things are moving. When we look at a chart or we look at any chart, at the end of the day, we're looking at candles. Whether we're on a monthly, a 1 minute, or a 1 hour, they're all just candles that we're looking at. And so it's literally the same exact thing. But in that one single candle, there's a lot going on there, right? There's a whole trend, if you will. I don't know if you've I know you said we can touch on, I guess I'll talk about anything, but
Yeah,
I
you can
don't
talk
know if
about
you've
whatever you
ever
want.
I don't know if you've ever dealt with like psychedelics or anything like that.
No, I
Um,
haven't actually.
you haven't dabbled. Yeah, man. This is not an endorsement for psychedelic use. This is not a promotion or advertisement for any of that. You guys, y'all do what y'all do. But definitely like psychedelics kind of gave me a huge breakthrough on the charts, really. Um, like mushrooms, microdosing mushrooms, and just like back testing on, like, I know it sounds wild, but like literally, I tell people this and they're like, "Yo, no way." But one day I'm just like, because I've dealt with mushrooms for some time now. It really, you guys can do your own research. Like I said, I'm not gonna I'm not promoting this at all. You guys can do your own research and make your own decisions. But for myself, yeah, I like to use psychedelics here and there, and I use them very like ceremonially, like very intentionally and with purpose. Because I feel like it's a pretty intentional substance, and whatever you intend to get out of the experience is what you'll get out of it. So, like, of course, if someone wants to just get high, then yeah, they'll just get high. But if go into the experience with a different intention, you'll find yourself getting that. But yeah, one day I just decided, because usually when I do shrooms and stuff, like, I like to be like out in nature, or like you're just like somewhere around nature, like, or by a body of water, or like in the woods or something. But one day, just because me noticing how like my mind operates on it, I just decided, like, yo, like, what would happen if I just back test on this shit? And I just like started back testing hard and heavy as fuck. And it just gave me a completely different viewpoint and perspective. Yo, I posted that on my story the other day.
Bro, there was a really good one I saw a few months ago, and I can't find it, but I just did a quick search. That wasn't no microdose. I felt that was appropriate for the
Yo,
conversation.
nah, I posted that on my story the other day. Nah, that's real shit, man. Like, sometimes you like you over here trying to, especially if you eyeball it, it's like, nah, that was not a microdose. I like to microdose, as well. But like when I'm back testing on shrooms, I wouldn't say it's a macrodose. It's more like it's a decent amount, but it's not like, there's like really levels when it comes to shrooms. Like, you could microdose, you can kind of be in this like midpoint where it's like, you could really operate and be, functional. Then it's like you start to get to three and a half and up. Then you're like, now you're really getting into the realm of like, okay, get ready to go on a journey inside of yourself, and maybe cry about some shit that you put off when you were 6 or something. I don't know.
Mm-hmm.
But then above that, like, you go over 3.5, it's like, yo, make sure you don't got shit to do that day, because
Clear your schedule.
yeah, clear your fucking schedule, because you're you're going on a ride. But Yeah, I mean, like when I back test on it, I typically do like maybe a decent amount, like not one that's gonna take me over there. But it gives me a completely different perspective on the market. You know, like for myself, when I'm on shrooms, like my mindset and the thoughts that I have and the perspective that I have on things is completely different. And so, like, I'm here like high as fuck on some shrooms, and I'm like trying to get myself to focus on these fucking candles. And like the thoughts that just start coming into my mind is just like some shit that I haven't thought of when I was sober. And I'm just like, I'm like what's really going on in these candles? Like,
Hmm.
I really start talking to myself, and I start like, I almost talking to the chart, if you will. I was talking to Bay. I was looking at gold. We can pull up Bay real quick because I wasn't looking at whatever the fuck this is. That's Chef, I think. Chef is cool too. But I was talking to Bay. You know, I was talking to Bay, and like, I'm like, Bay, like, what's really like? Tell me about yourself. You know, like,
Yeah.
started speaking back to me. You know, she started speaking back to me like on gold. Like I had some major fucking breakthroughs of just like my interpretation of market structure and the fractalness of the market. And I came across like a couple of things, man. But that recently, yeah, it's gave me some crazy breakthroughs. I want to say like after that, like my trading actually kind of went to a different level, if you will. You know, now if you're on this call and you haven't done shrooms before, I'm not saying take shrooms and you'll be a meta trader. It's not what I'm saying at all. If that's the message you get, you know, more power to you. But because you know it's gonna affect everyone differently. You know, some people they probably can't even look at a chart on that shit. But
That'd probably be me.
like you're dead in space, just staring at this shit. Like, don't try to. I didn't take no positions on that shit neither. Yo, anything y'all do after this, I'm not responsible. Don't try to go trading on shrooms. You dropped the wrong lot size. But nah, it definitely, you know, for myself, like really opened my mind. But yeah, there's just fractalness on the market. You know, it's that's what it all boils down to. Like, of course, smart money gives us those more pinpoint areas, you know, understanding what's really going on, you know, the whole international like price delivery algorithms, like really understanding the algorithms and the order flow and like pinpoint areas. But I want to say like market structure and the candles in itself, it shows you so much, you know.
Mm-hmm.
It really does. And I highly recommend to anyone to just, you know, really backtest market structure, man. Like go dive deep when it comes to market structure, and it comes to Wyckoff, because I think both of those pretty much go like hand in hand, if you will. I just kind of want to see what Aussie is doing here. Aussie said, "Fuck that! I am not coming up here." Cool. Okay. Time frame. Where we going? Like go on.
Real quick, while you're pulling up a chart, I wanted to get this in here. So a little bit earlier, you said, you know, being comfortable with the risk, right? So I think a lot of times, as a beginner and even intermediate traders, struggle with wanting to place a trade because they're afraid they might lose, or they're afraid that, you know, if they get stopped out, they're going to lose X amount. And so they end up not taking a trade. And then, of course, inevitably, that's the setup that, you know, they would have done well on, right? The market went their way, but they didn't get in. So in your opinion, how does someone get comfortable with the risk? You know, is it money based? Is it percentage based? What is it for you? Like, what makes you comfortable with putting risk on the table?
I'd say for myself, because like I'm not like super risky, you know, like I always tell people, you know, make sure you're using risk capital, which is, you know, money that you can afford to lose. that won't affect your immediate lifestyle, right? Like you don't want to trade your rent or some shit like that, right?
Right.
And so just using risk capital, which is money that I genuinely am okay with losing. What helped me being okay with the risk was shifting my perspective on it, and understanding. Cause I even remember when I first got into trading, and I had to talk myself into buying IM at the time $500, right? You guys got in at a institutional candle. I bought at equal highs. But, at the time it was like $500, and I had to really talk myself into like making the purchase, and even putting money into an account to trade. And what helped me become okay with the risk was like changing my perspective. And I remember doing this. I literally like looked at my bank account. I literally pulled open my bank account, and I just was looking at where my money was going. And at that time, and your space, my money, let's just say that. But and like me seeing that, it's like, okay, well, my money's going here, and that's not doing anything for my situation. It's not helping me advance. It's not helping me anything. If anything, it's pulling me back even further. And so it was really taking that perspective of like, okay, if I'm willing to spend my money on this, then why shouldn't I and wouldn't I be willing to spend my money on something that's going to further my education, or a trade like this where I can potentially make some more money and put my money to work. So it really became shifting the mindset of, if I don't spend my money on this, what is it going to go to, and is that going to be beneficial? Right. Of course, now I feel like we're in a different era. We're in the era of the whole like funded traders and stuff. And so, you guys don't really have to worry as much about risk. But like if you started trading in like me and John's era, where it's like you're already used to putting up your capital and putting it on the table and putting it at risk and blowing accounts and shit. Because anyone that started, like, we've all been there. You guys don't really have as much risk. Whatever the cost of the challenge is your risk. And with that, it's just, like, it's like, hey, if you're willing to purchase this or purchase that, it's like, why not buy a challenge to potentially get funded? But yeah, that's what helped me really accept the risk. Just comparing, what else would my money go to? It's like, I'm taking this trade and maybe risking $100, $200 on the trade. And it's like, okay, well, if I didn't do that, what would I spend this money on? Outside of, your bills being taken care of, that extra bread that you have, because you're always going to be using risk capital anyway. It's like, what would that go to? A party? Some liquor? You know what I'm saying? So like, it's like, what would
some
it really
shrooms, yeah.
Yeah, some shrooms, exactly. So that's what really helps me become okay with the risk. And then I feel like there's levels to it, like there's always levels. You may get to a point to where, okay, you're okay with risking $50 a trade, and that's fine. Now you want to push the boundaries, and now you're okay with risking $100 in a trade, $200 in a trade, $500 in a trade, $1,000 in a trade. Right? It'll be different levels to really scale through. And that's why, trading really is super psychological. Once you learn what it is that you're looking for in the markets, it really does become, a battle in your own mind, of you versus you. And just being okay with that risk. That's what really helped me. But yeah, that's just it. Once you get over that, I don't feel like you completely get over it. I feel like you get through a certain level. Like right now, I'm at the point to where I'm wanting to become okay with, risking. I mean, when it comes to a funded account, none of the money you're actually risking yourself. So I'm speaking on like your own capital. I'm wanting to now get to a point with risking $1,000 on a trade. Like catching a 1 to 5, which is 1 to 4 bare minimum, which is why I like to go for it. But like risking $1,000 on a trade on your own money, it's like I'm not at that point yet, and so I feel like it's levels, And then when you're around certain people, when you put yourself in the fire, you put yourself around other people, you'll see that they're at different psychological levels than you are. It's like I'm over here trying to, comprehend risking $1,000 on one trade of my own capital. And, there's the next person that's like, yeah, I mean, 10K in a trade risk is light,
Yeah.
And, scaling up to that point. When it comes to funded accounts, I would just say you want to look at it like your risk is really only whatever you pay for the account. Of course, once you get the account, I feel like people, and me and myself included, like I experienced this because trading a funded account is different than trading your own account. It is two completely different ball games, in my opinion. Right. But yeah, like once you get to that point of like with the funded account and everything like that, I feel like some people, they maybe get to a point where it's like, okay, they don't want to lose the account, and so maybe they're not okay with the risk on the actual trade because they don't want to take an L and like lose whatever account or whatever the case may be. But just developing a plan and executing that plan over X amount of trades will give you the data that'll make you confident enough in executing. And so forward testing really helps with that stuff too, in my personal opinion. Because that's like what I had to do to really transition into trading full time. Like that's a psychological battle in itself, because when someone first gets to the point of like, yo, I'm gonna quit my job and, look at trading towards my overall main income, the pressure to perform, you could be a fantastic analysis, but the pressure to perform could cause you to do dumb shit. You know what I'm saying?
Yeah.
To force trades. And that's why we talk about multiple income streams and stuff. But like myself, like when I transitioned into like starting to trade full time, I had to really like kind of slow walk myself, because there was a point in time that I started seeing really great results, and I just up and quit and just was like, yo, this is it, fucking got it. Like, yo, don't ever feel like you got it, because market gonna be like, what, bitch? Stop loss. Like, yo, because it's like we're always getting it, it's always levels. But like when I was transitioning to trading full time, I had to really walk myself through, because I started off just like quitting, and then just doing my thing from there. That didn't go too well, and so I had to transition from like going from full time to like working a part time job. Like Jim Rohn mentions the magic of part time. Like that shit actually really works. But like, yeah, you'll just notice like it's different psychological barriers that you'll get through in your journey of trading. But yeah, that's what helps me. And it's forward testing helped me a lot. Because when you forward test, you give yourself that, I don't want to say real time, but you give yourself that data that shows you that over X amount of trades, I should have made enough money to take care of this bill or that bill or whatever the case may be. Mark Douglas really, his stuff really helped me transition from what he said, looking at it instead of a trade by trade basis, but looking at overall a series of trades. Because when you put too much emphasis on one trade, and it's like that's the one that you need to play out, and you're just looking at that one, it's like it's a lot of psychological strain and pressure. But when you start to forward test and you know that I'm gonna take losses, but let me just record, okay, over 100 trades, how well did I do? Then you start looking at it from the perspective of, I don't need this one single trade to play out. I just need to make sure I follow my plan so that way I can get the results of, okay, after 100 trades, I will be up X amount of percentage, or, you know, we'll have won X amount of trades. Forward testing, definitely. Forward testing helps me a lot with just gaining the confidence to accept the risk, to, you know, go full time, to like do a lot of things. Forward testing has been probably one of my biggest biggest factors that helped me with a lot of things in my trading, for sure. Just want to see.
All right, so I think Eduardo asked a pretty good question, and he asked, how do you help yourselves not deviating from your trading plan?
Ooh, you wanna start off?
Yeah, sure. So it kind of coming off of what you said, you know, one of the hardest things as a trader, at least for me, I can't speak for everybody, but you know, when you're someone who, like, your net worth grows, and no income claims, but you know, multiple sources of income, if you live on less than you make, right, and you're saving money, you're trading money, investing money, whatever, the risk becomes greater, right? Because, you know, 1% is, you know, it changes, right? Like the percentage stays the same, but the money aspect grows. And I think scaling is one of the hardest things for me personally, because, you know, back in the day, let's just say $20, you know, that was all right to risk. And $20 now to me is a joke. You know, you lose $20 and I'm like, bro, I'll fucking make a meme about it, you know? Or even like $100 or $200. Like, I used to be devastated when I lost $200, and I could lose $200 today and I'd LOL. You know what I mean? So it's getting to the point where you got to be comfortable trading way, or the risk now is way more than that, you know, and growing into that for me was a struggle, because I used to associate, like, oh, I just lost a 2-week paycheck, or, you know, I would put these values on it, like, you know what I mean? So scaling up was difficult, and I think what helped me push past that, and what keeps me on track for not deviating my trade plan, is thinking back to those times where, you know, you lost $1,000 on a trade, $2,000 on a trade, $4,000, you know, dollars on a trade, and stuff like that. And when that hits you, you know, for the first time, and that shit stings, it really does, and it sits with you. So when I'm getting ready to take a trade, I know that, look, this setup might be nice, you know, those equal highs are clean and this and that and the third, but I always think back to what it felt like, you know, like the money, you know, money comes and goes, we all know that. And it's not the fact that, you know, you lose X amount of dollars, it's the emotional damage, right? LOL. It's the negative feelings and the negative emotions that really hurt. And so that I don't want to experience again. You know, I don't want to experience what that felt like, not being able to sleep at night because I'm like, fuck, man, and is this really for me? Or, you know, do I have to go find a job again? You know, or, and all these thoughts go into your head, right? Maybe those people were right. Maybe the haters are right. Maybe I'm not meant for this. And that's what really rustles your jimmies, you know? So I don't deviate from my trade plan as much anymore. You know, sometimes I'll still take a shitty trade, or I'll take a trade that may not have a 1 to 3, and I might break my trade plan here and there in that aspect, like risk reward, or I might under leverage sometimes. Instead of putting on a full 1%, I'll put on a 0.5%. So that technically is breaking a trade plan because you're under leveraging, but I don't over leverage anymore because it's too painful to go through that again. So that was just something that I had to experience in order to not do that. So that's why. What about you? How do you not deviate from your trade plan?
Yeah, no, definitely for myself. I would have to say I agree there. Um, Having the experience, 'cause I really beat myself up, yeah, personally. Like whenever I deviate from my trading plan, which just doesn't happen as much nowadays. And like John said, if I do, it's really like what me under leveraging or me maybe um that's probably really the only issue that I would ever have nowadays. Because like I've been big on just like preserving capital and just like continuing to grow and stuff like that. But what for myself is forward testing. It's like forward testing my trading plan. The more that I see it over and over play out in my face, the more confident I become in it.
Yeah.
And like shifting that perspective of a winning trade is not your trade hitting TP, but a winning trade is definitely you following your plan. Because you can get in a vicious cycle when you deviate from your plan and the trade wins. Because then you start to, I feel like, subconsciously start to program yourself in thinking that it is okay to do this, right?
Right.
Whenever you go against your trading plan and then it wins, like that really can set you back. Um, and so I feel like that comes from focusing too much on a single trade. Me, I'm a big numbers guy and I'm super big on logic. And so just because that one trade maybe won from me deviating my trading plan, I look at probabilities. And this is why I've been super big on forward testing and recording my stuff, because it's like, okay, let's say you go against your trading plan and it wins that one time, but you've been forward testing and you've been recording every time and anytime you do go against your trading plan. Now you have this hardcore data in front of yourself that shows, yeah, sometimes I can win when I do this, but most of the time I'm fucking myself, right? And so me having that hardcore data in front of my face of like, yo, no, I'm fucked if I do this, is what really helps me not deviate from my trading plan. Um, like really forward testing, and getting that data is personally what helped me, because I'm, like I said, I'm big numbers guy and big on like logic and stuff. And so I really needed to see the raw data of like, yo, why should I not do this? Because I was stubborn where it's like, yo, every win of you going against your trading plan, you maybe forgot, since you didn't record it and write it down, you forgot about all the times you lost when you maybe did that same thing, uh, going against your trading plan that happened to win this time. And so me doing that and having the hardcore data in front of my face, that's what really helped me just decide like, yo, okay, well, it's obvious here and it's right in front of my face that I don't need to be doing this. So that is the number one thing. And then also just, excuse me, just again, knowing that over X amount of trades, you will have said performance. Me not wanting to, I don't ever want to go back to working a job. So, if my data is showing me that me following this and doing things this way is what is profitable and beneficial, the thought about going back to a job is like is I would never want to do that.
Mm-hmm.
Um, that's scary, and so that also is what helps me stick to my trading plan. It's like, can I afford to deviate from my trading plan? I really can't. I don't have kids or anything like that, and my mom is she does, she's already retired and stuff, so it's like, I know some people use emotional anchors like that to keep them, sticking to their trading plan, where it's like, yo, I have kids or I have a family to take care of, so I can't afford to go against my trading plan. And I know that's one thing that has helped some people that I've talked to. But since myself, I don't necessarily have that. I almost had to draw another fear, if you will, or something else, where it's like, okay, no, this is why I can't afford to go against my trading plan, because I don't want to gotta clock back in ever. So that for me is what keeps me definitely on track. But yeah, once you see that raw data in front of you, you know, it becomes you start to feel stupid. Now that the data and the numbers are in front of you, you're just stupid. Like you start to feel stupid whenever you just like, yo, you know. And every now and then for myself, it may still happen where it's like, you know, because we're human, you know, we let thoughts and emotions creep in, and you know, instead of just going off of what the market is showing us, we think too much, you know, and we may under leverage or over leverage. I don't really have an over leveraging problem, just because I have a separate account for that. Call it the fuck it account, right? The fun account.
There you go.
So, but yeah, just seeing that data in front of you will really help you. I know for myself, just like, yo, no, it's clear that I should not be doing this.
Yeah. So in other words, people lie, numbers don't.
Exactly. People lie, numbers don't. The numbers don't lie, man. And numbers has helped me even formulate the way that I trade now. You know, like I know some people have asked me like, oh, why do I only play institutional candles? Or, you know, why don't I play imbalances or this or that? Or why don't I do that?
Mm-hmm.
It's just the numbers. You know, it's not that I cannot win from playing an imbalance. It's not that I can't win from doing this or that. Yes, you can win, but what is more probable? You know, me doing my numbers and seeing that, hey, you know, if you're from, and I talk about this a lot, but it's called optimizing. You know, optimization, when you optimize your results. You know, back when I used to do e-commerce, it was like the way that you would optimize a store is you would put out a whole bunch of products, right? And then you would see what products are selling, what products aren't selling, what products are selling fast, and you're having to restock on these products much more. And then you, after a certain amount of sales and a certain amount of like restocking on inventory, you have this hardcore data of this shit is not selling and this shit is selling. Let me stop doing, you know, let me stop selling the shit that's not selling and only focus on these that are selling. Now, it's not that these didn't make any sales at all, right? It's just they made far fewer sales. So I don't need to focus on that. And so that's what I pretty much did with my trading, to where it was like, you throw out the different ways that you can enter and approach the market. And then over X amount of trades, you build this data to where it's like, okay, I saw for myself personally, just based upon the way that I approach the market, that it's not that I couldn't win from taking an imbalance. I definitely had wins, but most of my losses came from me taking an imbalance that wasn't frameworked around an institutional candle, right?
Mm-hmm.
Most of my losses came from me trading during London session. Most of my losses came from, it's not that I can't win during London session. I was having wins during London session. I was having wins for imbalances and stuff like that too. But seeing where I was mainly winning, okay, I win most of the time when I trade late Asia and I trade New York. I win most of the time when I focus on institutional candles. I win most of the time when I play 4-hour, 1-hour ranges. I just started focusing on only that. You know, it's not to say that I didn't take any losses doing those, but my wins were much more frequent. And so like that optimization will help you as well. You know, the numbers don't fucking lie. You know, the numbers don't lie at all.
You know what you're saying about optimization, right? How you have all these products and then you launch everything and then you see the data in the back office, right? So I got a couple more questions just based off of that. So real quick, first of all, that actually reminds me of the 80-20 principle. You know, 80% of your income or 80% of your sales will come from 20% of your products and yada 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 and all that. But let me ask you a question on your data. So when I hear about like forward testing and really looking at your numbers, you know, do you utilize a service like my FX book or FX Blue, or do you have like an Excel spreadsheet with your trades and stuff on it, or like how do you keep up with your data and all your analytics for your trading?
Yes, my FX book to look at the hardcore numbers as far as like what pairs I'm doing good with, what stuff like that.
Mm-hmm.
You know, and it's just for the month, stuff like that. But like really journaling it yourself, like I have a huge uh digital document where and I structure it out. Like I've recorded so much things on here. I've even recorded like how I approach news. You know, like what news events, have a huge reaction, small reaction, late reaction. Is it better to enter before the news or after the news? Things like that. So like I just started with literally just a blank Google Doc, and I started just recording all of the things that I thought was important to record. So like the time of the days that I'm taking trades, as far as like the time window. So I gave myself X amount, like set time windows that I wanted to use and test out. It was London time window, it was late Asia time window, and it was New York time window, and just every time, doing tallies as well. Like, okay, so this for this New York time window loss, for this London time window loss, New York time window win, doing tallies, and yeah, just everything that I thought was important. Was this trade on the institutional candle? Was this trade off of an imbalance? Did I use my fib on this? Did I like everything that I thought was important? I noted like kind of every little thing. I wouldn't say that's the most optimal way to do it. My mind just like it works well in doing it that way. Like I know some people that do use a spreadsheet and stuff like that, but I don't really like I'm not really great with spreadsheets and stuff. So
Mhm.
yeah, I just started writing and recording everything on like Google Docs, and just everything that I thought was important, you know. And so those main things for me was, of course, the technicals. I have a video on YouTube talking about like the 5 things that I think are important to plan for when putting together a trading plan. Um,
Can you send me the link to your YouTube, or can you let the people know how to find your YouTube channel if they're not already subscribed to you?
oh yeah, no, definitely. V for Valentino is the same as my Instagram handle. I can send you over the link. But yeah, it's the same as my Instagram handle. You guys can catch me on YouTube. I do plan on putting a lot more content on there with some of the other guys in the trade house here. So definitely stay tuned for that. But yeah, I have that video that talks about the 5 things that I think are important in putting together a trading plan. Of course, the first thing is just the technicals, and that in itself is a whole lot of shit.
Mhm.
Like what step-by-step process you follow. Like I pretty much call it why you get into a trade, right? Where and why, right? When you get into a trade, what you risk when you get into a trade, right? Where you get out, and then how you manage the trade along the way. Meaning like when do you go break even? When you partial, how much are you partialing? Because like these are things that I started to think about that I felt I needed to get more detailed on, because for a while I was just kind of winging it. Like I knew how to analyze, but it was just like, oh, 100 pips, I'm gonna just close half of my position. Like I started actually running numbers of like, okay, what would be the better, like, what results do I get better? Should I close 80% of my position? Should I close, just getting super detailed on that stuff. Like I even, me and Jordan, one point in time, we forward tested risk to rewards, just as far as like what risk to reward should we use. We were forward testing 1 to 3s. So you can forward test so many different things, just whatever comes to your mind. But we started forward testing, risk to rewards, because, it's like we like to swing trades too, but at the same time, it sucks when your trade does this X amount of, movement, comes back down near to your entry, and it's like, fuck, I could have just taken some profit on that. It comes back, and if it's still valid, I re-enter again. Um, so like that became an issue. So we started forward testing risk to rewards. We did 1 to 3s. We saw that 1 to 3s would get smacked pretty consistently, but we were leaving money on the table. Then we did 1 to 4s, 1 to 5s. 1 to 5s we saw were a little bit too far. Like it would come back to our entry on a swing before doing 1 to 5. Most of the scenarios. But like, yeah, whatever you can think of, whether it's like where you should exit as far as risk to reward, what you should be risking on a trade, what your edge is as far as, are you playing institutional candles, are you playing mitigation candles? Like you can take all these different things and run tests on all of them. And so that's pretty much what I did. But that's how I came up with my 1 to 4s, closing 80% at 1 to 4. I'm currently doing a forward test on like for swings because I am wanting to work on holding my swings a lot longer as far as like how much of my position I have on the table.
Yeah,
You know,
same.
yeah, like I've been doing this 80-20 rule, and that like the 80-20, closing 80%, letting 20% ride, like that'll build your account fast. Just locking in profits, locking in profits. Um, but now I'm wanting to kind of push those boundaries. So now I'm testing. I'm currently running tests on doing I'm wanting to get to the inverse of that, where I'm closing 20, holding 80 to whatever my final target is, and that's going to be a little psychological battle. But I'm slowly just like inching towards it. Right now I'm at 60-40 for my swing trades, where I'll close 40, let 60 ride. Oh, my bad. Close 60, let 40 ride. Yeah, so like I'm always forward testing different things that I'm wanting to try out and just getting the data on it so I can figure out the best approach. But my FX book I use for like just track record and like actually seeing what percentage you did for the week or for the month, out of how many trades did you win, out of X amount of trades, stuff like that. But everything else I just record myself on a Google's document.
Very nice, very nice. So I got one more question for you, and then if the chat has any last minute ones, then they can feel free to do that. I think one person did talk about automation, which I'll get to in just a minute. But here's my final question for today. So I just mentioned the 80-20 principle about how you were with the e-commerce and everything, and you mentioned it again with the taking partials, taking 80% off, holding 20%, or now inversion where you're taking 20% off and then holding the majority of the position. So I know the 80-20 principle from a book that was recommended to me by this guy in the Navy at the time. This guy, one of my friends, he came running in and he was just talking about this I actually have it right here. Richard Koch, right? So the 80-20 principle by Richard Koch, I guess is how you say that name. But either way, so that's how I got introduced to that. As far as any books, do you have any book recommendations, whether it's about trading or personal development or mindset or shrooms or anything? Do you have any books that you would recommend for traders or for anyone to read?
Yeah, 1,000%. I would recommend the 7 Hermetic Principles. There's several books that break that down. I think the Kybalion is the way you pronounce it. That's the main one that most people reference when talking about the 7 Hermetic Principles. But that was a big game changer for me. Was the 7 Hermetic Principles.
Can you spell that? I'll pull it up on Amazon and show everybody.
Yeah, Hermetic, Hermi. My bad, Her. I gotta type it out. I spell better typing than
I do. Yeah, look, guys, we're sellers, not spellers, so disclaimer, okay?
I'm much better at writing. That's how you spell it. So Hermetic.
And so it's the 7
Hermetic Principles. The book might be, there's a book called that, but the Kybalion also talks about the 7 Hermetic Principles.
Or if it's on, is it on Amazon? Who is it by?
That's how you spell it. Let me pull it up here. Yeah, it's on Amazon.
Is it by the 3 Initiates in Sumo?
Yep.
Okay, well, I guess they got a couple different versions up here. I'll just share it to my screen real quick. So there's that. The study of the Hermetic philosophy of ancient Egypt and Greece. And then I guess there's like a second one here.
Get the one by William Walker.
William Walker?
Yeah.
This
William
one?
Walker Atkinson, something like that.
The definitive edition right here. I don't know if can you see my screen?
Yeah, I can see it. Yeah.
Okay, so you're talking about this one?
Yeah. Mm-hmm. That goes into 7 hermetic principles. But yeah, so, a bunch of people have written their like different versions of it, but the meat and potatoes is still the same. Of the 7 hermetic principles, that was one that gave me huge breakthroughs for personal development and for trading. Honestly, like, it's not a trading book, excuse me, but if you go ahead and apply the principles, because the principles in this book can be applied to everything in life, truly can be applied to everything. And I'd say out of those principles, the principles of principle of polarity, principle of mentalism, and the principle of rhythm are 3 principles that really resonated with me and gave me a huge breakthrough when it comes to just personal development and also trading. But yeah, I would recommend that 1,000%. I mean, I would recommend the Emerald tablets, but that's a tough read. I'm not gonna lie, because it's in like open edition stuff. And that's not something that's something that people gotta go through a lot. There's an audio on YouTube for it. I've never actually come across a physical book for that. But that's another one that gave me a huge breakthrough after going through it like 5 times. The first time, you're probably not gonna understand what the fuck you're supposed to get out of that book. But yeah, that's another huge one for myself. And Greg Braden, The Divine Matrix, when it comes to personal development. Greg Braden, The Divine Matrix. And also, and this one here, it sounds like a religious book, but it's really not. But Speaking the Lost Languages of God, also by Greg Braden. That goes really into depth on the science of the law of attraction. Because the law of attraction is a science, right? It's not a belief. It is not a theory. There's actual science on how it works. But yeah, I like Greg Braden's stuff because he's a scientist, and also, he's big on spirituality, but he goes really in depth into the actual science of law of attraction and how manifestation works. Like I said, I'm really a logic and numbers guy, so those books are pretty technical, if you will. But yeah, they gave me some huge breakthroughs. Once I went through the Divine Matrix and Speaking the Lost Languages of God, it really helped me understand law of attraction and just manifestation a lot more, and exactly how it works. And of course, if you are familiar with law of attraction, then belief level is really important. And so me understanding things just naturally raises my belief level on these things. And so those books really helped transition the law of attraction and manifestation, going from an idea to me of something that I believe, where it's like, yeah, I believe in this idea, to actual, like, no, this is undisputable. This is the way that it works because of the numbers and the science behind it. So yeah, those for spirituality, for like personal development as well. And then the last one that I would highly recommend, last but definitely not least, is Power versus Force by David R. Hawkins. Power versus Force is another one that was a huge breakthrough for myself.
You said David Hawkins?
Yeah. He's got a lot of great books. But Power versus Force, I would say, was the most, like, that one gave me the biggest breakthrough. I would say read that one before reading his other ones. Because that one, he references back to that one in a lot of his other books. So I would, if you go down the David Hawkins rabbit hole, I'd recommend starting there with Power versus Force. But yeah, those are the ones that I would recommend, definitely.
Very nice. I put the names of some of them, or at least part of the names into the chat so you guys can go take a look at that. And if I can, if you guys are watching this in a recording, I'll do my best to put the links in the description. So if you want to help support the channel at no additional cost, if you use the links in the description, I will get a commission, but you know, that's only if you choose to do so at no extra costs. So there is that. But there you go. Divine Matrix, Speaking a Lost Language, the Kybalion, and Powerverse Force. Unless I miss one, then you can update me, Iffy. But I think there was, oh yeah, the question on automation I think was the last one, and then that'll pretty much be it for me. So someone asked, have either of you guys gone down the path of semi-automation or full automation of your strategies? I'm semi-auto for now and intervene for my exit. So real quick and dirty, I personally don't use anything automated. I trade manually 100%. Entries, management, stops, all that, I do it all myself. So I don't have any robots or anything automated to that effect. So but what about you, Iffy?
No, I'm a manual trader. I've recently started testing out some bots. I will always trade myself. You know, a bot could bring me $100,000 a month. I will still press buttons myself because I look at trading as like a sport for real.
Yep.
I really love it. But yeah, I'm actually testing out some bots right now. And I'm actually going to be setting up another bot today. But yeah, I'm testing out some right now just because I do think AI is going to be big. You know, I know some people personally that have shown me some crazy numbers in their bots and stuff. So yeah, I'm testing out some. So yeah, I mean, you guys can stay tuned for that. A lot of times on my Instagram, if you follow my Instagram, yeah, I do share my journey on a lot of the things that I start to dive into. So yeah, if you follow me on Instagram, you know, I'll definitely be mentioning that. But yeah, I will always be a manual trader. And right now I'm just currently testing out some different bots, playing with the settings and stuff to see, yeah, to see if we can get something consistent. Like, I don't really need something that's gonna do crazy numbers. If I can have something that is doing something automated consistently, then that's all I really care about, because then I can over time dump fat amount of money in it, and it's like, hey, it's giving me a consistent percentage a month. So yeah, I'm currently testing those out, and yeah, I'll update people on Instagram for sure.
All right, very nice. Look, bro, I appreciate you for being here. I know you dropped a lot of value today with forward testing, risk, trade plan, record keeping, and then even the book recommendations, as well as the shrooms and stuff like that, and your experiences with all of that. So thanks again, man. I know definitely people enjoyed it. Look, and if you guys aren't subscribed already, make sure you hit the subscribe button. If you like today's video, guys, give it a like so we can get there on the Instagram. Iffy, thank you so much, brother. We appreciate you.
No problem, man. Appreciate you for having me on. Definitely, y'all. Make sure y'all hit that like button for my guy. Let's get it.
Thanks, man. I'll talk to you soon.
Alrighty. Peace.
All right, so that is pretty much going to be it for Iffy's portion for today. We've been live probably about an hour and 46 minutes right now, so definitely enjoyed that, and I hope you guys got some value. As mentioned before we started, the only thing I was looking for, I thought we might get to 10 or 4105. I don't think we got there. I don't even think we got to 4102, actually. We barely tapped into 4100 for the S&P, so well, I guess I was wrong on that. But I guess, I mean, honestly, looking back, I think today was a little sloppy in here. But if you guys want to, I can break down what we did in here a little bit earlier today. You guys good with that? Alan, oh yeah, that's right, Alan. Thank you for reminding me. about the divergence. Yes, well, yeah, we'll go over that. But yeah, appreciate that. Minimal, Naruto, Eduardo, thank you. What time usually? I missed. So the schedule for right now for this YouTube channel is every Monday and Friday at 1 p.m. Eastern. That's our current schedule, and I will add another session here soon. Once we actually hit the monetization threshold, it'll be a little bit after that. I'll add a third session, but more information will be put out here in the next coming weeks. But for now, the schedule is Monday and Friday at 1 p.m. EST. Okay. So now, as far as what Ali is talking about, the divergence from this morning. So usually when you have relative strength analysis, a lot of the times you can actually get some, like, you'll get more than one. You'll get like a bearish and a bullish and then another bearish and another bullish, and it can be a little confusing. So let's go ahead and pull that up. We're looking at S&P, so I'll pull up the NASDAQ as well. And we'll kind of go from there. And the NASDAQ, I usually make it purple. You guys can see all that, right? And now I'm gonna put on my watermark. So there we go. Let me see. So it depends on what you were looking for. When it came to the target, the only target I had was not on the S&P or the NASDAQ. It was actually on the Dow. Okay. And it was on a 5-minute time frame. And that was because of, I think I told my chat 33,800 a little bit earlier this morning. It was definitely late as far as like into the move. But you know, it's not always about me calling a trade for a trade's sake, but you know. Anyways, I want to say, let me see. Let me do this real quick. The NASDAQ in here was higher and the Dow was lower. But when we look at these highs on the Dow, it was cleaner. Whereas the NASDAQ, I mean, yeah, they had some highs, but if you look at the run here, and then the run on Dow, the Dow did run that, but the NASDAQ didn't. It ended up being a little bit weaker. And also, the retracement here on the Dow was not as deep of a retracement as the NASDAQ was. And so, I think for that reason, that's probably why I went with Dow. But Ali, send me a chart if you have one on Telegram, and I'll be able to look at it. I don't know if we can, if there's, if you guys can drop TradingView links, you could definitely do that and see if that works, and I'll look at it there too. But I need to know which one you're talking about, and then we can go from there, because you know there's different time frames and all that kind of stuff. But yeah, there's definitely a divergence there. Just want to make sure you guys can see that. Higher NASDAQ. I'm pretty sure that's a NASDAQ. And then a lower Dow here. And that was a little bit pre-market. And then we get our finessement down in here. Shake and bake, if you will. And then we ran up. But yeah, I think I'm going to need to see a chart for today. Thank you, Menace. Sean, appreciate you. Appreciate both of you. So while Ali's doing that, let me take some of these things off of here and let me talk about the trade that I took today. So it was, if you look in here, I should have kept the NASDAQ up. Okay. All right, so if you look at this, right? When you look at the higher high on the S&P, y'all can see that, right? This is a higher high on the S&P. Okay? Boom. Now with that, actually, let me turn on my mouse highlighter real quick. All right, cool. So right here, higher high on the S&P, lower high on the NASDAQ. Right? Now, if I'm in a bullish state of mind, then I wouldn't look at that as something worth trading. But the reason that I thought it was worth trading is because if you have this in the back of your mind, okay? If we actually look deeper at the S&P, okay? This low and then this low right here at 822 and then 842, those happen to be identical right there. Okay, so that sets up equal lows. And can you guys hear the music? I know I always gotta ask. But because again, I can't ever tell. You might be able to hear it now if you couldn't hear it before. Naruto says yes. Max, the only Telegram I have is for my personal students. It's not for the public. Okay. So this sets up right at 4,074 and a half, sets up equal lows. Okay. Now we had news at 9 o'clock. Okay, and we start to get volatility. Now on a 1 minute time frame, this may not have looked like this was worth shorting. However, if you go down to the 15-second time frame, I know I haven't really shown that here on YouTube, and I normally don't go down this far or go down in time frame, I don't go as small of a time frame as a 15-second usually. However, so look at that 9 o'clock candle on the 15-second. You see how volatile it is? This one. Oh shit. That one. Okay, so we get volatility at 9 o'clock. I forgot what it was. You'll have to double check Forex Factory. It was something. And so we get this run lower. Okay, so that's like a willingness, like, oh, okay, it's getting ready to trade below those lows, but I'm not going to chase that, right? I'm not going to chase that going lower. I want to play retracement. So then right in here, okay, at the just before the 9 o'clock candle right here, okay, that low up to this high right there, little imbalance. Okay, so as soon as it trades into that, I'm short. I take a little bit of drawdown. I mean, it's a 15-second time frame, so it's not all that much. Immediately in my direction, I can go break even very fast, and then 72 right there was my exit. So it was a super scalp. I could probably hold my breath longer than I was in that trade, but 72 is right there. Okay, so why 72? Because I talk about all the time zeros, 50s, 20s, and or zeros, 20s, 50s, and 80s if we go in order. So I'm looking for 0 levels, or even 70 probably would have been okay too, but wasn't trying to get the exact low per se. But both of those are there. So it's like in, out, and then done. Okay. So yeah, it was definitely a short scalp, and then obviously price ran higher. So it's like, all right, yeah, now that I'm out, it's cool. So on stuff like that, when the risk is really small in terms of points, then yeah, I'll usually throw on more than my normal position. But the reason I wanted this afternoon 4105, and again, I was wrong about trying to pick the high. Well, at least as of right now, 4105 I thought we would get. But after this happened, right, we trade higher, and then right at like 922 we end up leaving super small time frame equal highs there. Okay, so that's what I wanted for this afternoon, but I just didn't really care for anything in here. I just didn't. Like, I was looking at this and I just didn't like it. Maybe you guys can find something within that, but I couldn't. I mean, even on a 5-minute, this is... What the fuck is this? I mean, I can't... I can't work with that, you know? It's just... Not me. Okay? Now, I guess... In terms of, like, the order flow, I mean, you do see the down candles being respected. Right there, possibly. Right there, you have some down candles here. Price does respect that. And then you do see some down candles here that price is not pushing lower, but I wouldn't have traded that at all, in my personal opinion. But overall, it does respect that, and then runs straight up to that level, but it doesn't surpass that by very much, like at all. So that's interesting. Or just with the down candle, since there was equal lows down there too, right? I think you're talking about this as equal lows. I mean, it could, but look what we've done. We left equal highs, dropped, rallied, dropped, and then with this candle at 1131, you see how there's a lot of emphasis on that? This candle right there, that up candle, you see how there's a lot of emphasis on that? That to me signifies that we have likely, you know, changed direction. So I don't see price coming back down there until later. Right, because we're down and down and down and down, and then we break structures to the upside, and then we retrace. Apparently we accumulated and then ran. So equal lows can always be left open for later, just like these equal highs were left open for later, if that makes sense. So, but I can tell you right now, if I was in a trade on this run lower, I would have not held on to all that just to see if this wants to actually go to 105. I would have left it alone for today. And I'm not doing anything there. I do want to look at the NASDAQ though. I think I saw something earlier. Now the NASDAQ to me was the weakest market, but at least it traded into a setup. And this was during lunch, so I probably wouldn't have done anything here, but look at this. Some lows. We have some highs, and then we run lower. So we do take out these lows. We rally, retracement, and then that same 1131 candle on NASDAQ, look what it does. It trades all the way up here. So in this moment, when that candle closes, or even as it's trading up here, right, what does that set up? And I probably won't be on this stream forever because my mouth, like my teeth still hurt from yesterday. I got dental work done yesterday. So I'm a little bit uncomfortable, but you know, when you got a schedule, you got to stick to it, right? Should have had shit done on like a Wednesday. I'd have been okay. But that sets up a potential mitigation, which it does come back into here. It just spends a little bit of time in there. You know what I mean? Now from that, it does run. And all it does is take the morning session high. That's it. So again, it's just weak, right? Because we saw the S&P trade above these highs. But with the NASDAQ, it's not even able to get to that morning high. It barely caught an intra session high. And then came all the way back down near this again. So I would have likely avoided NASDAQ today. And the Dow is much stronger today. Right? Just look at the overall, like, look where we're at on the NASDAQ. Right? Like from this range high to this low, look where we're at. And then you look at Dow. Like we're way higher, you know, and then you can see in the data as well. The Dow up 0.36%, and the NASDAQ is actually down 0.8% per TradingView calculation. So wouldn't have been ideal to long NASDAQ, I would think. So, oh, and I want to check British pound too. I want to see if we traded. Oh, that's unfortunate. 2050 was a target I had a little bit earlier. Allie, did I mention that to you guys? Or did I forget? Because I don't remember if I did or not. Let me check real quick. If I forgot, I'm definitely an asshole. Oh, and I see your chart, so I'll pull it up in just a second. Oh, I did. Cable 1.2050 downside target. It's really close to those lows. I want to see if that gets bodied today. Okay, cool. So the reason for that is 1 hour right here. Okay, not equal, but slightly apart. The one to the right is a little bit higher, so that's usually what you want to see there. And then just below that is a 50 level, 1.2050. So 2050. That's why I wanted that. Now I sent that really late. That was like at 10:30. It was like right in here. So there was only like what, 20 pips that you could have really gotten out of that. And look, I mean, I'm not up for London. I barely New York. I slept in today. I woke up at like 8:30 and I went to go watch the indices, not currencies. So, oh, what the fuck? I can't. Let me do something real quick, chat. Okay. No, Ali's comment got flagged because you repeated what I said, and now I can't show it in the chat. YouTube and their shenanigans, but all right, whatever. So anyway, from a 1 hour perspective, that's what that looks like. So does everybody understand that? You look at this overall range from this low up to this high, and that's right at that 6182. Very logical level. Buying low, selling high, or selling high and covering low. And let me look at this real quick, and then we can go from there. Lower. Okay, I kind of see what you're confused on a little bit. So let me try and explain this the best way that I can. When you have a market that comes down and then it rallies up, okay, when we get a run like this, when we've got a significant bull run, I'm no longer looking at lows, okay, because we've already had a bull run. I'm looking at lows when we've had a bear run. So when we've had a nice upswing, I'm now trying to compare the highs together and see if there's a a lower high while the other one's making a higher high to go lower. So with what you're looking at, look at those lows from 3 a.m. to 9 a.m. where your blue one is lower and the teal one is lower, the blue one is higher, and the orange one is higher. In that regard. Make sense? So that's a 5-minute. Matter of fact, let me see if I can I pull that up here? Let me see. Well, what I don't want to do is, okay, it's fine. I'll just leave it here. Let me see if I can pull it up on my end then. So that way the rest of the chat can know what the fuck is going on. So give me just a minute here. Let's see. So we got S&P. We will add the Dow. And then we'll add the NASDAQ again. So what I was just referring to, so you guys can see, because if I'm speaking directly to her and y'all can't see the chart, you're not gonna know what's going on. What I'm talking about is this. How, well, I guess if we use the lowest low here, then that one's lower, this one is higher, and this one is higher. So that's what I was talking about. And this one is probably the NASDAQ. All right, so while it's trading lower at 11:15, the other indices are higher. Make sense? So I know it's a little tricky at times, and you know, trust me, I had to ask myself the same shit. I was like, well, this one's bullish and this one's bearish, but we've got a divergence to highs and we've got a divergence to lows. Like, what am I supposed to do? And you know, I've taken a lot of bad trades that way. And so this is why I think relative strength analysis is important, but it's also important to know the liquidity aspect of it. And so the other indices didn't have really a clean target. I think the I think the Dow did. I think these highs are very clean for the Dow, and I would have much rather went with that. So if we have an upside target, then we can come in here and start to look for smaller time frame divergences. And I think I had posted this earlier into the Telegram. Let me see. Yeah, I did. We took short-term low at 903. I think we took this low as well. I think. Barely. But we took this one, a little bit more distinctive. Broke down. That was that same S&P business here that I showed you. That was my short. Price rallies above this high and then slams down, and that's where you have a little bit of a higher time frame mitigation. See, low, high, lower low, that took stops, two sets of stops. Broke structure, came down. Then you see this beautiful up candle right there. Look at that. Look at that. That right there. And then what did it do when it hit that? Reacted instantly. Next candle, boom. It ran. And then 33,800 was met perfectly. Because of, to me, in my opinion, because of these highs. London was short. Someone asked about that earlier. I forgot who it was. I gotta go back. Steffi, I don't know if you're still here because you asked that quite a bit of time ago. But if you are, You asked, can you show us your approach, how to use the London session for New York trades? It's a great question. And I've shown this in many, many streams. I try to show this on every stream. When I approach a chart, okay, during the New York Stock Exchange, I'm thinking about who is in open profit during London. I don't trade London. Not anymore. If I can find my fucking brush tool. We had consolidation, and then we ran lower and lower and lower. So anyone trading London, oh, you're still here? Great. So anyone who was trading London is in open profit. Their shorts are killing it because the price is trading down and down and down. So where are their stops going to go? Well, probably above this high and above this high, but you're going to have a ton at equal highs. Okay, not everybody trades 1 minute time frame, but you know, 15 minute, 5 minutes, stuff like that, intraday. Okay, so they're going to look at this as resistance. Oh, if the market comes back up there, you know, we'll short it. Or anyone above that, oh, we'll buy on a breakout. And look what happens. They bought that breakout, and then the market ran lower and they got their face ripped off. You bought the high and got your face ripped off. That's why we don't do that. We like to invert that. Why should the market trade up here? It should trade up there because of stops and because of liquidity. Oh, well, same shit. But it's like, okay, cool. Before we do that, though, anyone who was long in here, well, they're going to get out of there because anyone who's long is going to trail their stops. So why do you think the market does that? It trades from recent lows being swept to recent highs being swept. And look what the market does every time. Comes back, right? Runs lower for stops and then higher. In this case, it was higher and then lower. And then guess what? Anyone who bought that, they got their face ripped off going lower. And if it's still a bullish market, okay, cool. Now we'll resume and go higher. So now people bought that. They bought the high, got out on the way down, and then watched the market trade in their direction. And now they're frustrated because they don't know how the market works. They don't understand the dynamics of price action. They don't understand manipulation, you know, rebalancing, liquidity, stuff like that. So this is why we try to reverse engineer everything. You know, most people lose. Why do they lose? Reverse engineer it. You know what I mean? So it's simple, but it's really hard to grasp at first. Now, I've been doing this for a very long time. I've taken a lot of bad trades, so trust me, I've learned a lot of things, but you got to study this stuff. And this is why I try to point this out to you as much as I can. You know, even on YouTube, at the beginning of every video, or even some of them where we were watching all day long, okay, think about it. Again, I'm not trying to be an asshole, but think about it. How many times have I actually been wrong compared to how many times I've been right? Even if we weren't trading, even if we didn't take trades, but being right on the direction, being right on where the market's going to go, yeah, I got it wrong a couple times. For sure, 100%. But if you compare how many times I got it wrong to how many times I got it right, it is not 50-50. It's not even close. It's probably like 80-20, like the principle we spoke about earlier. Not because, you know, it's me or whatever. It's because of I want to wait for really high probability setups or really high probability directional buys. If I don't know what's going to happen, then we're not going to take a trade, or I'm not going to say, well, I think this or I think that. It's if we don't know what's going to happen, then we're just going to wait for more information. And then when we get something high probability, then I'll point it out. Like Ali, if you're here, I don't know if Josh is here, but Ali, you know, think about it. I send you guys ideas or where I think the market's going to go, and sometimes it goes there really fucking fast. Why do you think that is, though? It's because liquidity is going to be attacked. Now, my timing may not be the best. I might get on the charts and the setup might have already formed while I was asleep. I can't help that. I can't fix that. But when I see something, I go, oh, okay, maybe the students want to watch this. So I'll send it to you guys to see. So you go, oh, John thinks it's going to 2050. Well, let's see if it does that. And I want you to watch it. Does it do that or does it not do it? So 2050 is here. And I sent that at, I think it was 10 something. It was like 10:30. Let me see. Uh, 10:49 actually. Okay. Yeah, that's why I said it was very late. 10:49. Okay. Yeah, so yeah, you see how late that is? Like, that's here, and we've already sold off really, really aggressively. But what did we do? We dropped, rallied, lack of wick, dropped, rallied, dropped, and then one more retracement. We have equal highs. It sweeps that and then runs for 2050. So I don't think there's really a whole lot you could have done with that. I don't think there's anything that you really could have studied. Maybe these up candles here. Up candles being respected in a bearish market. So you would have watched price come into that and then shit to bed. But that's only like 10 pips. I mean, I don't expect you to trade that or do anything with that. But it's just about watching price. It's about getting directional bias and going, okay, well, I think this because of this. And then see if it goes in that. And as you're watching it, look for the things that you've been taught. See if imbalances are respected. See if up candles are respected in bearish markets. Like, that's kind of the point of that. You know? But anyways, it's Friday and there's only 40 minutes left of the stock exchange. I'm not doing anything with this. I'm not doing nothing the rest of the day. I don't see anything high probability for me personally. NASDAQ looks like complete dog shit. And indices have already swept. Well, the S&P swept this high already, and then this high was swept again. And now we're kind of back into a range. I'm not trading this. I'm not doing anything with that. Dow, same thing. I don't want to short the Dow because it's our strongest asset today. So I'm not going to do that. And then I'm just not going to short NASDAQ. I think today is just done. I think it's over. Maybe I'm wrong. Maybe you can find something in the last hour, but I'm not going to push it. I've already did a little bit this morning. And, you know, like they say at the casino, when you're up, you got to walk away. That's what people don't do. They run up a couple good hands and make a bunch of money, and then they stay, and inevitably the odds play out and they end up losing all their money, right? So it's like the same idea. Now, I don't think trading is gambling in that aspect. I mean, I know my win rate and I know the win rate for poker, and it's vastly different. So I'm not going to say that it's equal there, but it's the idea of, well, we're up. Why not just walk away? And that's kind of the mindset I'm on. There's only 40 minutes left. Well, 39 minutes left. I'm not doing anything the rest of the day. Just secure the bag and log out. I'm already logged out of everything today. I'm done. So, but that's pretty much going to be it. How long have we? Oh, so we've been here about 2.5 hours, almost 2.5 hours. So if you guys have any last minute questions before the weekend, now is the time. Now is the time. We talked about a bunch of shit today, and I'll change the description later on too, so that way you guys watching the recording, or if you want to watch the recording, you can see what it was about. And then we briefly touched on the indices. We talked about British pound. We talked about I don't think we touched on the euro. We talked about relative strength analysis, liquidity, mitigation, imbalances, equal lows, equal highs, stuff like that. So we definitely discussed a lot of things. And I appreciate you guys for the 48 likes so far. This will be the last time we do this. But listen, guys, if you're not subscribed already, make sure to like the video, hit the subscribe button and the notification bell, so that way you don't miss future content. And if you're not following me on Instagram, that's my only one, at John Fibonacci. No junk dots, numbers. I'm not going to ask you how your trading is going. I'm not going to ask for Bitcoin or any of that dumb shit. Okay? So that is all. Make sure to study this weekend. Make sure to print off the charts and don't just look at it like, oh yeah, that's cool, and then just leave it at that. Okay, you got to put the work in, otherwise you're not going to get it. You're not going to get it. Thank you, Naruto. Yes, I do. Yes, I do. I try to. You know, why come on here, you know, and then just bullshit for 2 hours and talk about a whole bunch of nothing? Why would I do that? I hate that. I despise people that do that. You know, I see people come on here. I'm not gonna name names, but I see people come on YouTube, and bro, I mean, there's people getting 500, 600, 900 people live, and they don't know what the fuck is going on. You know, I watch people here and there, and they're totally wrong. You know, oh, I'm bullish, and the market just dumps lower. You know, and stuff like that, and or they'll be teaching, and they'll just ramble on and won't say anything. I'm like, dude, this is such a waste of time. That's terrible. I would never purposely waste your time. If we're gonna come on here, let's you know, be valuable. You know, learn some shit. Because I wouldn't want to waste your time, just the same way I don't want to waste my time if I'm watching someone else. So, but yeah, y'all be good. I will see you guys next weekend, or next week after the weekend.